In the electric vehicle world, BYD, Build Your Dreams, has become a global powerhouse. Once overshadowed by Tesla, BYD now leads as the world's top EV seller. This isn't just about one company's rise, it signals a seismic shift in the global auto industry, with China at the forefront. BYD's transformation from battery maker to automotive giant is a masterclass in ambition and strategy. In China, BYD is more than a brand, it's a symbol of national pride and innovation. Its diverse lineup, from the Seal sedan to the Song SUV, dominates city streets and appeals to a wide range of buyers. BYD's secret? Vertical integration. It makes its own batteries, including the acclaimed Blade battery, giving it a cost and innovation edge. This self-sufficiency lets BYD adapt quickly and keep prices low, fueling its rapid ascent. But as of June 2025, a new challenge is emerging: turbulence within BYD's dealership network. The very system that powered its growth is now under strain, raising tough questions about the future of car sales in China. Is this a sign of weakness, or a strategic reset for the next phase of competition? Understanding this disruption is key to predicting the future of BYD and the entire Chinese auto industry. To understand BYD's current challenge, we need to grasp the role of dealership networks. Dealerships are the vital link between automakers and customers, handling sales, service, and local marketing. They invest heavily in showrooms and staff, becoming the face of the brand for most buyers. For automakers, dealerships offer a scalable way to expand without shouldering all the risk. In China's vast, diverse market, a strong dealer network is essential for reaching both major cities and smaller towns. Local dealers know their communities, helping BYD penetrate every corner of the country. This network fueled BYD's rapid growth, giving it a competitive edge over direct sales startups. Dealers were motivated to push BYD products, creating a powerful, mutually beneficial relationship. But the health of this network is directly tied to BYD's sales performance. Any disruption can have major consequences for growth. As the market evolves, the stability of this network is more critical than ever. BYD's current turbulence could reshape not just its own future, but the entire industry's approach to selling cars. Across China, BYD's dealership network is facing mounting pressure. Dealers are struggling with excess inventory as BYD pushes more cars into showrooms than they can sell profitably. This oversupply sparks price wars, forcing dealers to offer steep discounts, sometimes even selling at a loss. Margins are razor thin, and some dealers are barely surviving. Smaller dealerships are looking to exit, while BYD favors larger, financially stronger partners, leading to network consolidation. The structure BYD built is shifting, creating uncertainty for dealers and employees. BYD is also experimenting with splitting its vehicle lineups into separate sales channels, increasing costs and internal competition for dealers. The result: high inventory, shrinking profits, and a reshuffling of the dealer landscape. This turbulence is changing the very foundation of BYD's sales strategy. The company's aggressive growth is now testing the limits of its own network. How BYD manages this shakeup will shape its future in China and beyond. The stakes have never been higher for the brand and its partners. For customers, dealership turmoil means big discounts, great for buyers but risky for long-term service. Struggling dealers may cut corners, leading to rushed sales and declining after-sales support. Fewer dealerships could mean longer trips for service, frustrating owners. For BYD, pushing high volumes boosts short-term numbers, but risks damaging its brand if customer experience suffers. An unstable dealer network can erode loyalty and drive away experienced staff. Aggressive discounting also pressures rival brands, sparking a wider price war and squeezing profits across the industry. BYD's actions ripple through the entire market, making the dealership business even tougher for everyone. The company must balance growth with the health of its sales partners to ensure lasting success. Why is BYD's network under strain now? The answer lies in fierce competition and shifting industry dynamics. China's EV market is a battleground with dozens of brands fighting for dominance. BYD's strategy: flood the market with affordable cars to squeeze out rivals. This volume play puts huge pressure on dealers, leading to today's turmoil. Meanwhile, EVs need less service, cutting into a key profit source for dealerships. New sales models like direct-to-consumer and agency approaches are gaining ground, challenging the traditional dealer structure. Economic headwinds and cautious consumers add to the pressure as supply outpaces demand and prices fall. BYD's internal ambitions also play a role. It's streamlining its network to prepare for global expansion. The current shakeout may be a deliberate move to build a stronger, more professional dealer base. It's a painful but possibly necessary step for BYD's next chapter. The company is cleaning house to stay competitive at home and abroad. This disruption could set the stage for a new era in Chinese auto retail. BYD's rivals are watching closely, ready to seize any advantage. Legacy automakers may tighten their own dealer relationships, emphasizing stability and support. EV startups like NIO and XPeng will tout their direct sales models as the future, appealing to tech-savvy buyers. International brands could position themselves as reliable alternatives, highlighting strong after-sales service. The chaos at BYD may accelerate the industry's shift toward hybrid and agency sales models. Automakers will rethink how they sell cars, blending online convenience with physical showrooms. The goal: more control over pricing, less risk for dealers, and a better customer experience. BYD's struggles could spark a retail revolution across China's auto industry. To weather this storm, BYD must act fast. First, it needs to align production with real market demand, easing inventory pressure on dealers. Financial support, rebates, marketing funds, and more realistic targets can help stabilize its network. BYD should invest in its partners, treating them as long-term allies, not just sales channels. The company will likely expand new retail formats, separating mass market and premium brands, and opening flagship stores for direct sales. This hybrid approach blends broad reach with tighter brand control. International expansion is another key move, exporting more cars to relieve domestic pressure. Success abroad can boost BYD's image and stabilize its business at home. The next steps BYD takes will determine its future in China and on the world stage. The company's response now will shape its legacy for years to come. BYD's dealership shakeup is part of a larger transformation sweeping China's auto industry. Intense competition, shrinking margins, and new business models are forcing every automaker to adapt. The traditional dealership model is fading as customers research and even buy cars online. Brands must now offer seamless, transparent experiences that blend digital and physical touchpoints. Expect a mix of direct sales, agency models, and multi-brand showrooms to emerge. Dealers will need to become larger, more professional, and tech-savvy to survive. Their role will shift from simple sales to brand ambassadorship and value-added services. Smaller, family-run dealerships may struggle to keep up in this demanding new landscape. The shakeout at BYD is a preview of broader industry consolidation. The future belongs to those who can adapt quickly and deliver superior customer experiences. China's auto retail landscape is being rewritten in real time. BYD's story is just the beginning of a new era for car sales. BYD's dealership turmoil marks a turning point for China's EV giant. Its aggressive growth strategy has delivered market dominance, but at a cost to dealer stability. This is a stress test for BYD's entire ecosystem, revealing both strengths and vulnerabilities. Manufacturing excellence isn't enough. Long-term success requires healthy, motivated partners on the ground. BYD must now balance ambition with collaboration, nurturing a profitable dealer network. The company will likely emerge leaner and wiser, better prepared for global expansion. The Dragon King isn't being dethroned, but it must learn to rule more sustainably. BYD's experience is a lesson for all automakers navigating China's fierce market. Its next moves will shape not just its own destiny, but the future of car sales in the world's largest auto market. All eyes are on BYD as it writes the next chapter in the electric vehicle revolution.